There are many reasons that I am bearish on the US dollar in a macro view, as in the next 5 to 10 years, I think the US dollar will be actually going down. There is one reason that is visible on a chart, which is this 12-month area of supply that we have seen come in control and actually respected pretty easily. However, I think it is possible, just because I'm bearish on the macro view doesn't mean I don't think the US dollar will be bullish over the next month or year. Here is why. On the 6-month chart, you can see we have a 6-month area of demand that is in control and currently being respected. Going down to the 3-month chart, you can see we have not only a demand zone that's embedded inside of that 6-month demand zone, we also have an upward trend line in control and being respected as well. And then when we go down to our lowest time frame on the macro charts, on the monthly chart, you can see we have a monthly demand in control and we are at the bottom end of that channel. So I do think we have room to go up, even though, yes, I am bearish on the dollar in a macro view. I still think we should be looking for longs right now on the US dollar. And where I think we are headed is potentially to this drop-based drop weekly supply above at 103.06. Again, I'm not saying the dollar is going to shoot off and just completely rip to the upside and start to target these highs. I just think based off of those macro demands that are in control, the fact that this weekly demand is in control, we could expect the dollar to rise to this weekly area of supply and then see that bigger move I'm expecting to see on the dollar. Obviously, it is concerning that we've pretty much failed to really push up to that supply just yet, but there is something we will be watching out for this week, which is this daily chart. If you look at the daily chart, go back and watch my previous weekly Forex forecast. I've been talking about this upward trend line here. As you can see, beautiful trend line. It was removed. And I was saying, if we remove this trend line, I will be bearish on the dollar from basically the break of the trend line down to this area of demand. And I thought we would see a reaction off of this demand. And we are so far. We definitely are respecting this demand zone. This is the big question this week is, will this daily demand zone hold and push up, or will we break it? If we break it, then hey, we have to maybe consider, hey, maybe that weekly demand's been tested so much that we're actually going to see more dollar weakness. So what I'll be watching this week is on the daily chart to see if this zone can be removed. Let's say we break it. I definitely will be somewhat bearish on the dollar, but I'm not going to be super bearish on the dollar unless we can get a clear peak and valley like this with a great downward trend line on the daily chart. Then at that point, I will have to admit, okay, we are most likely going to see much lower US dollar prices, and it might be that we're not going to push up to that weekly supply. That's what it's kind of using these zones and trend lines to determine what is going to be taking place. Another thing we have to watch for, so with that daily demand in control, we are watching to see if this 4-hour downward trend line can be removed. So far it is being respected, so it's being respected this week. Maybe next week it won't. So we'll be looking for candles to close above this trend line to show that this downward trend line is in fact being removed. We have seen evidence of that maybe taking place because on the 1-hour chart, we had a 1-hour downward trend line here that is currently being respected and it will not be removed. Actually, we still have another hour after this before the DXY chart closes. We do have a 1-hour demand zone down below because we removed an opposing 1-hour supply. So this is definitely evidence of strength on the dollar. So it is possible we pull back down to that 1-hour demand and then rally up from that demand zone. So for now, we'll be watching this 1-hour downward trend line, the 4-hour downward trend line, and this 1-hour demand zone as well. If you look over here, we actually have a pretty decent drop-based drop supply zone, a little hidden zone. I think if we do push up to there, let's say we really start to see the dollar strength, the 4-hour downward trend line gets removed as we are expecting. If we do pull up to this 1-hour supply, I think we will see a decent move off the supply before we end up breaking it. So just want to be careful around that supply if we do get strength on the US dollar. On to the forecast for the Euro US dollar. So we did just barely remove some daily supply above. Now we have the demand zone down below, but really just not even really relevant. It's just more for tracking the zones. But this is definitely a weak sign on the euro as far as strength goes. Weak as in, it's weak for shorts. So I think that we will maybe be pushing up here. It's very tricky to tell. We'll have to take a look at the lower time frames here. On the 4-hour chart, we have a 4-hour trend line that is currently being respected. Not looking great though. So we will be looking on Sunday night, Monday, whatever you want to look at it. We'll be looking for candles to close below this trend line to really signal, hey, maybe we're going to be pulling back on the euro US dollar to pull back down to this 4-hour area of demand. But look at the strength we saw this last week in the euro. And that's why we caught a beautiful long trade on the EURUSD. One of the members actually caught this trade in the Discord group as well. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions. And finally, the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately. Absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So if we do pull back on the euro, we have a 4-hour demand zone down below at 115. It is a very good zone. It's a nice rally-based rally, kind of a hidden zone, removed supply, targeted liquidity. So if we do start to pull back, break below this trend line, we're going to be bearish on the euro until we hit this demand zone, and then we could look for potential longs. Since we are somewhat bullish on the dollar, like I explained at the beginning of the video, you don't want to look for a massive trade out the zone. It could happen, but I would rather be aggressive with trade management off of this zone. So let's just say we get a pullback, we get a nice move your stop from down below to break even or even up with price, or take 80% of the trade off. Don't get greedy with profit margin. Look for 1-to-1, maybe a 2-to-1. Move your stop to break even, as soon as possible. If you are bearish on the euro, we have a 1-hour supply above. It is somewhat decent at 118. Not a fan of the huge wick, but that is our supply zone for a short trade if you are bearish on the euro US dollar. On to the forecast for gold. Looking at a weekly chart, we have seen a great recovery in gold after that massive red week a few weeks ago, and just looking really strong. Looks like we could be targeting the all-time high here on gold. And even if we do get a pullback, nice monthly demand down below 35.50, down at 34.47. Somebody left a comment, I think it was last week, that would be crazy. There's no way gold can do that. Well, it definitely can. You have to kind of get off the lower time frames and take a look at them at the higher time frames as well. The daily chart is correcting a bit, obviously, as well. As far as trading goes, we're really focused on the 4-hour and the 1-hour chart. We have two options. So option number one is this 4-hour chart. This is our 4-hour upper trend line. This is our guide for looking for longs on a 15-minute time frame. So as long as this trend line's holding, we are going to be looking for longs on a 15-minute time frame, guys. Okay, I accidentally hit this here. Go back to the 4-hour, my bad. So if we do respect this trend line still, that will be our guide for day trading longs. Let's throw a channel tool on this. If you look, we are sitting below the 50% mark of the channel. So it is a great time to look for shorts on a longs on a 50-minute chart. We want to be looking for longs below the 50% mark near the trend line. Once we start to push above the 50% mark, then you might want to start to look to take profits, and you want to hold off on longs because price is overextended. We are using this channel tool as a guide to see if price is overbought or oversold. On the 1-hour chart, we do have a 1-hour demand zone down below. I mean, it's a pretty good zone. It removed a downward trend line. Look at the explosive move away, followed by another explosive move away. So a lot of demand down here. Wider stop could be good. At 47.99, that is our demand zone for a pullback entry long on gold. And if we break that area of demand, any supply is going to be a decent shorting opportunity. And on to the forecast for the S&P 500. And if you guys are enjoying this video so far, make sure you hit that like button, subscribe to my channel so you don't miss another forecast in the future. As far as the weekly chart goes here of the S&P 500, we did something amazing, which I love to see, which was create a very clear upward trend line. And the reason I love that is, for one, it's a bullish sign. I prefer to trade with the trend, but this trend line now is going to be our guide for longs. And if we break the trend line, then we kind of have to hold off. So I love that we have created that upward trend line. I thought we were maybe going to pull back down this weekly demand, but clearly just basing out here and an explosive move to the upside. We now have a new weekly area of demand right up here, or right down there rather. So even if we do pull back, I mean, great opportunity for buying. And even if we break that zone, we have a great opportunity for buying. So really just bullish all the way here. However, guys, we are sitting at, we pushed to all-time highs. You're kind of chasing now if we get in long. So it doesn't mean we still can't get in long, but what it does mean is we want to be a little bit careful with longs and don't get too greedy with profit margin. So if we do get a pullback on the daily chart, we have a good daily zone down below at 68.06. This would be a great area of demand for like H1 swing trading longs. You'll be looking for confirmation inside of that zone. If we do get a pullback to that, you could also look for day trades in there. I'm just saying this is a good higher time frame zone if we do see a deeper pullback, which is possible on the S&P. I know everybody, when we start to really go to the upside, everybody thinks it's invincible, but it's not. We easily could get a retracement. As far as day trading it goes, we have a few options here. So we have a 4-hour upward trend line. Let's throw a channel tool on that so we can see whether we are at a decent point or not to look for longs. And we're close to the 50% mark. We're pretty much hovering right around it. So below the 50% mark in this area, 15-minute time frame day trading longs are going to be good. A pullback to this 4-hour demand at 69.19 could be decent as well. But again, we are so overextended on the daily and the weekly chart. Could this zone hold for a massive 10-to-1 trade? It could. It is with the trend. It does make sense. However, I'd rather have this be a cheaper price. So if you want to get in long here, it's got to be somewhat aggressive trade management. I would go with a hybrid trade management due to the fact that, again, we're sitting at all-time highs. It's a pretty overextended. But I would do hybrid trade management because it is with the trend. So hybrid trade management just means put your stop to break even, then keep bumping it up. Maybe take 75% of the trade off. Keep bumping up stop loss with price because you could turn a small risk to reward trade into a very, very big one. The nearest zone I'm seeing is on the 1-hour chart here at 70.71. So if you want to get a little bit more aggressive with longs, that is our nearest 1-hour zone. And of course, you could look for day trading time frame longs in here as well. You don't have to just have an entry, stop, and take profit. So if you're a day trader, you could view this zone as your higher time frame. There's nothing wrong with that. But again, since we are so overextended and we've seen nothing but green the past 3 weeks, you want to be aggressive with trade management here. Don't get too greedy. Don't just have a stop loss and take profit above and hope for the best. You want to actively manage this trade. Take profit as price is going up. On to the forecast for the USDJPY. We recently created this weekly upward trend, and we are at a decent point for longs right now on the USDJPY because we are below the 50% mark of that weekly channel. So that is a good sign for looking for longs on the USDJPY. The big question now is, will we be pulling back down to this daily demand? It kind of looks like it here as we keep, making new lows here. That's where I think we could be headed if we do pull back a decent amount down to 156.15. It's a decent point to look for longs if we do get a pullback down to that level. As far as what we are going to be monitoring, it's really only this 4-hour downward trend line here. So if we throw a channel tool on this, we're most likely going to be very, very overextended. I wouldn't say very. We pierced below the channel. Got a very aggressive push back up. So we are coming close to the 50% mark. And if you're going to look for day trading shorts, you'd rather be doing it in this area rather than below the 50% mark. So day trading shorts on a 50-minute chart are going to be good as long as this trend line's holding and we are at more towards the trend line. If we break the trend line, that's going to be a bullish sign, and any demand there is going to be good for longs on the USDJPY. Alrighty, on to the forecast for the GBPUSD. Going to show you the weekly and the daily here. Really nothing to go off of here in the weekly. Just sideways price action, which is fine. We then go to a lower time frame to see what is taking place. And it is looking bullish, right? We had a downward trend line in the daily. It was removed cleanly, but we've just shot straight up. We don't have like a sustainable trend line here or anything to really tell us where the direction is that we could be going. We are sitting about 50% between the high and the low here. So it is tricky to determine where the pound is going. We could be easily pushing up to this daily supply because supply and demand does act as magnets of price, in my opinion. How we will be monitoring the pound here is this 4-hour upper trend line. So right now it is being respected. The trend line is from here to here. That is a trend line. As long as this trend line is holding, you could justify looking for 15-minute time frame longs. If we break the trend line and then we have a supply zone above, that would be good for maybe a potential short trade. But for now, on the pound, really nothing super clear, not really any good zones. So we will be monitoring that 4-hour upward trend line. And then on the 1-hour chart, again, just very sideways price action, almost nothing to go off of here. And I'm not going to force anything for you guys. I try to keep it as honest as possible here. I'm not just going to force setups just because I'm doing a video. So hopefully you guys appreciate that. If we push up, remove this supply is very old from all the way back there. But if we break that supply, any demand there would be good for a potential long. So that's what we'll be waiting for here on the British pound. Alrighty, on to the forecast for the USDCAD. This is where I am from, currently living as well. Let me know where you guys are from and living in the comments down below. So on the weekly chart here, really just ping-ponging between price, really unsure where price is going here. We just removed a pretty decent weekly demand that removed a downward trend line. Unfortunately, we couldn't really hit this weekly supply above, so this is just a tricky chart to go off of on the weekly. It's really hard to predict where price is going based off of that. So we're going to have to monitor the lower time frames. Even on the daily chart, technically an upward trend, but I'm actually going to remove that now because I was more thinking that over above here. But now that we are really pushing down, to me, it just looks like we were going sideways, we pushed above, and now we are pushing back into this overall range here. So really tricky to determine where price is going on the USDCAD based off of our two higher time frames, which are the weekly and the daily. So what we'll be monitoring is the 4-hour and the 1-hour chart. So on the 4-hour chart, you can see we are pretty overextended, but we do have a nice 4-hour downward trend line. If we throw a channel tool on that, let's take a look. We are pretty overextended here, almost becoming irrelevant at this point, but we are pushing up, so I will give it another shot. But we are clearly below the channel. So looking for shorts is going to be pretty aggressive right now. I'll show you the 1-hour chart here in a minute, but I think we will be pushing back towards the 50% mark of the channel, and then I think looking for day trading shorts could be good, but we want to be aggressive with trade management if we do that. So draw the channel tool on your chart. Keep an eye on that 50% mark there. And if we do get a pullback up to the zone on the 4-hour chart, it's an older zone at 1.38. I really like the zone though. So if we do pull up, I want to see a reaction off of this resistance area because that will prove to me that there are stop losses into our supply zone. Then I think that short trade will be valid. And then you still want to be looking for like a 1-to-1, 1-to-2 aggressive trade management because it is such an older zone. So remember this 4-hour chart, we are very overextended. It is showing us that we have room to go to the upside because we are very overextended to the downside as far as that channel goes. So when we look at this 1-hour trend line, 1-hour trend lines are used for 5-minute time frame shorts. But it is looking decent. We're at a decent point in the downward channel here to look for shorts on a 5-minute chart. You still can do that. But considering the 4-hour trend, we are very overextended at the downside. I actually think we will be breaking this downward trend line on the 1-hour chart because we have to think of the bigger view. We have tons of room to the upside where this is kind of a little bit too hyper-focused. So you can be looking for shorts on a 5-minute chart as long as this 1-hour trend line is holding. Very aggressive trade management is needed. I would lower risk just based on the fact that the 4-hour chart is very overextended at the downside. If we remove that trend line, any demand zone there would be decent for a long trade as well. On to the forecast for the Aussie US dollar. On the weekly chart, we have a very sustainable looking upward trend line now. So that is definitely a bullish sign. So really, as long as this weekly trend line is holding, we could expect the Aussie US dollar to continue to rally here. On the daily chart, we broke above this high, pushed into our opposing daily supply as well. So we'd be looking for that to be removed. Pretty much irrelevant. It's so old and it's so old that it's not like a zone you're looking at a trade from or anything. It's just more about keeping it on the charts to see what removes it, and then we could draw the demand that does remove it. So that's what we'll be waiting for on the Aussie, especially since we have a weekly trend now. We are expecting that supply to break. The question is, how big of a move are we going to get to the upside? As far as trading it goes now, I know nobody's really looking at the weekly or the daily, but we do have a nice 4-hour trend line. So as long as this 4-hour trend line's holding, I like the 15-minute time frame longs. It makes sense to me. We're at a decent point to do so as we are sitting below the 50% mark. So near the trend line, anywhere here is good for longs on a 15-minute time frame. Let's say we break this upward trend line to the downside. We are now pushing below the trend line. We want to hold off on longs until we get down to this demand zone. And the reason I like this demand zone is we based out right before it. So it is getting a little old. So if we do pull back down to this demand, I want to see a reaction off of this support level to really show me that there will be retail stop losses here right into our little hidden rally-based rally demand, where I think we will see a move off of that zone. So this is exactly how I would be playing this 4-hour chart. So hopefully that makes sense. If it doesn't, let me know in the comments down below. As far as the 1-hour chart goes, if you are looking at the 1-hour chart, 1-hour trend line is currently being tested. As long as that trend line is holding, 5-minute time frame longs are going to be good. If we remove this trend line and there's a supply zone there, I will have that zone on my chart for the members. We could maybe look for a short trade off that supply and get a quick one because it is counter trend. So that's why I said a quick trade. So as far as the 1-hour chart goes, that's how I'd be playing the 1-hour chart on the Aussie US dollar. Alrighty, on to the forecast for the USD Swiss. We have seen this weekly supply get a nice move to the downside off of it. Definitely bigger than I expected. The reason I'm expecting to see it break is because if we just zoom out a bit, look at how overextended we are. It's funny how here it looks like we're getting a decent little pullback entry. But when we zoom out, I mean, look how overextended we are. So that's why I don't know how much more we really could fall. I think if we do continue to fall on the USD Swiss, we're most likely just headed down to this drop-based rally demand at 0.772, where I then think we could see a move to the upside. So you could be bearish down to this demand and then switch to a long bias once this daily demand is in control. So that's where I think we will be bottoming out if we do continue to push lower. We do have a few options here as far as trading it goes. 4-hour downward trend line being respected. As long as that 4-hour trend line is holding, 15-minute time frame shorts are going to be good. Pull back up to the supply. It is a little bit old at 0.79. So what I would prefer to see is somewhat of a move like this here, creating some sort of resistance trap. Then the supply zone becomes much better because we wanted to see the pullback here. We couldn't get it. So the pullback now will be old. And this is what I would want to see. Also combined with aggressive trade management because the supply is old. That's how I would be playing the 4-hour chart. On the 1-hour chart, we are so close to this 1-hour demand. It's pretty decent. It removed an upward trend line. Nice drop-based drop. The move away is very explosive. It's kind of just an obvious zone. I think we could break it just based on the fact that everybody might be seeing it. So if we do, see a move off the zone, I think it could be good for a 1-to-1. And again, based off of how overextended we are in the weekly, I wouldn't be getting greedy here. I wouldn't be looking for a massive trade. It could happen, but we are so overextended on the weekly that I don't really want to be holding a trade for that long. But it's a nice zone. I mean, the move away is very good. So I think it could be good for a 1-to-1, maybe a 1-to-2 trade to the downside. And if we remove it, any demand there would be a decent buying opportunity. Alrighty, on to the forecast for crude oil. And I'm sure some of you guys have gotten wrecked by crude oil. I personally haven't been trading it, and that's part of my trading psychology is to not trade these markets that go cuckoo. It's really that simple. And if you guys need help with your trading psychology, check out my podcast, the Stoic Trading Psychology Podcast. It is available anywhere you get your podcast. There's also a YouTube channel for it as well. So try to master your psychology, guys. That podcast will definitely help. Trust me. As far as trading oil goes now, let me be very clear before we even go into any of the analysis. Whether you're looking for longs, whether you are looking for shorts on oil, the markets have been crazy, so you have to be aggressive with trade management. Don't be getting greedy. You could be in a trade for, if you just throw a risk reward tool, let's just say you're short from here for whatever reason. This is not supply. Let's just say you're short from here. You're looking for a massive trade, looking for a 4-to-1. You're in profit now. Your stop should at least be at break even. I would take 75% of the trade off right now because we've seen oil do this and then all of a sudden you lose all your profits and you lose. So whether you're looking for longs, whether you're looking for shorts, be aggressive with trade management. Right now we have a nice 4-hour trend line. That will be our guide for day trading shorts. So we're at a decent point to look for shorts as well as we are sitting below the 50% mark. So if you're bearish on oil, 15-minute time frame shorts are good as long as this 4-hour trend line is being respected. If we break the trend line, any demand there would be a decent pullback entry for a long trade. If you do pull up to that 4-hour supply above, it's pretty decent as well at 114.78. But again, aggressive trade management definitely needed here, guys. So again, however you're trading, don't get greedy. Try to get in and out. There's plenty of money to be made here in oil. You just don't want to be getting greedy. You don't want to give up any profits. Alrighty, last but not least, we are on to Bitcoin, and a significant thing has happened on Bitcoin as we have pushed below the high, giving us finally a nice daily trend line to kind of go off of here. And I think we will be going up. I mean, we are pretty overextended right now, so seeing a pullback before we go up definitely makes sense to me. It does kind of line up with the logic there. And I mean, I'm not surprised to see us going up because these dotted lines here, that's a monthly demand. And I've been talking about that for many weeks now on Bitcoin. That's why we have seen a move up. I think our first stop is at this weekly supply where I think we could see a small move. I think the bigger move is going to happen off the supply above, but just kind of showing the bigger picture here. That is where I think we are most likely headed if we do see more strength in the Bitcoin chart. As far as trading it goes, we have a couple of options here. We do have a nice 4-hour trend line to the upside. That trend line was removed, we have a nice 4-hour trend line to the upside. This opposing supply was removed. We have a demand zone down below in the 4-hour chart now. But if you just look, let's throw a channel tool on this. It looks like we are pretty overextended right now. So yeah, I mean, we are sitting right at the top end of the channel. So if you're going to day trade long, you want to wait for a pullback near the 50% mark or below, then look for longs on a 15-minute time frame. If we do get a decent pullback, we have a decent 4-hour zone down below with potential liquidity. So I would like to see some reaction off this support, showing that there are stop losses here. Then a pullback down on that demand at 69.079 would be a potentially great swing trading opportunity on Bitcoin. If you want to be a little bit more aggressive, we have pretty nice 1-hour zone down below at 75,613. Beautiful reaction off of our zone. I believe I had this one in last week's Forex forecast, so you guys can go back and check that. I might have drawn it throughout the week as well, but anyways, nice 1-hour zone down below. That would be our nearest pullback entry for a long trade, just like we got here at that 1-hour zone. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.